Let's get the spoken word now on the sell side and the buy side from our chief equity strategist, John Blank, who joins us remotely via Skype. John, we are in year number 5 of a bull market. You've got the raging bulls on the sell side calling for a new secular bull market this year, 2013, that takes out old highs on the S&P 500. And just behind them, it seems like you've got the analytical bulls. So what might drive secular and cyclical activity over the next 12 months?
Terry, the issue here is earnings growth rates and the revenue growth rates that the companies that are embodying themselves in these indexes. And what everybody needs to see to get the Raging Bulls thesis to come to play is that the earnings growth rate happens. And in February, we saw plus 240 and plus 230 on the jobs. That's the kind of momentum into incomes and into consumption and into spending and into revenues and into earnings that we need to see to get that bull thesis to the Raging Bull consensus and away from those analytical bulls.
So what's your gut telling you? Are we going to get that?
I think we are, Terry. I think we've got the momentum building up in these housing markets and construction markets, and we got it in business services and trade. That's pretty comprehensive, and we saw pretty strong numbers coming out of California in the payroll claims. So that's all good news. That's all bellwether news. I think we're going to get it, Terry.
Talk to me about the buy side.
The buy side has one of the major differences between the two is the sell side's calling for the deep cyclical rally, which is the IT companies, the industrials, the materials, and the banks. The buy side likes the IT companies just like the sell side, and it likes the banks better, and it doesn't like the material companies, and it agrees on the industrials. So the major differences is stronger views on the banks from the buy side and much weaker views on the materials companies because they just don't think the pricing motion is going to be there for them. They might get the volume up, but they don't like the pricing, and they don't think that's going to happen this year. So the turn that the sell side is looking for out of the materials company, the buy side doesn't buy. They both agree on the IT.
I'm sorry, what are the risks out there then?
The risks, Terry, is that we have some type of unintended consequences coming out of Europe or coming out of the fiscal cliff negotiations that remain in play till the 30th of September. If something happens that gets dire, and it always has to be a government, that would cause one problem. The other thing is if the government, the monetary system in the United States pulls down on their bond buying, that can happen. We get a strong enough economy and they're looking to take the first quarter 14 where they think the bond buying tapers off forward a quarter, and we could see that. That would take the stock market down. So we need to watch out the Federal Reserve Open Market Committee minutes to see if they're going to take the bond buying down earlier now with the higher numbers out of the economy.
So just to clarify, bottom line, you feel that this year is going to be a good year for the market?
I think it's already been a good year for the market, Terry. I think we might pause here in another month or two or even correct, but I think we've got another month or two of legs in this rally.
All right, trying to put some perspective to the buy side and the sell side. With John Blank, I'm Terry Ruffalo.
Terry, I like that one.
Yeah, I think that one.